And the debt game is over. The reset, we're probably, I'm guessing maybe the fourth inning, fifth inning of a baseball game into the reset. But the last innings are going to be the wild innings. I don't think you'll ever see gold under maybe 3,800 again. I mean, it's very possible to see gold at $50,000 or $100,000 bid and nobody willing to sell. We're basically in backwardation worldwide. And what that means is people want their metal. They want it in hand. They want it and they want it now. They're not willing to wait 30 days, 60 days, 90 days. And that's why you're seeing markets that are paper markets are trading below markets that are physical markets. Well, understand that the price action for 30 plus years has been managed, if you will, with paper contracts, with leveraged paper unbacked contracts. And that is ending. Well, like I said, the action on the exchanges are changing because it's moving. They're all moving more toward delivery. They're all moving more toward a cash and carry market. Now, COMEX was not designed as a cash and carry market, and you can see the inventories have declined, especially in silver. You can see that with LBMA. You could see that with Shanghai, even though Shanghai is basically a cash market. The paper influence is waning at this point. The point in time where it's done, that's where you'll see markets crash and gold and silver basically become unobtainable. When all is said and done, junk is going to be the highest priced silver in North America. It will eclipse Eagles at some point because they make Eagles every year, and this year they've destroyed the supply of junk silver outstanding. Junk is the cheapest form, and it's the best form to own. So you're getting the best for the least. I mean, that's a bargain. Pre-33 gold, because you're buying it basically at spot. This has never happened. It will unwind itself, and when it does, you're going to see that they'll go back to 20-30% premium over time. And if there is a whiff of a fear of confiscation, watch how fast the premiums come back to the pre-33s. They're the best form for an American to own. If you're going to own silver in the United States, it should be junk silver, unless you're in an IRA. Same thing with the pre-33 gold. If you're going to own gold in the United States, it should be the pre-33s. It's as cheap as any other product. Being collectible, they're not bullion. So if there's an executive order like FDR put out in 33 to confiscate the gold, hey, you are not a hoarder, you're a collector.
The financial system is in its final innings. The decades-long paper game of suppressing gold and silver with unbacked futures contracts is ending as global markets enter backwardation, a clear signal that buyers want physical metal now, not promises. This irreversible shift from paper to physical will liberate prices, making $50,000 gold bids with no sellers a real possibility. In this environment, the smartest move is to acquire the most defensible forms of metal, constitutional junk silver, and pre-1933 U.S. gold coins.
But just understand that gold and silver themselves are money. Everybody's worried about counterparty risk. Bank A does business with Bank B. Bank B does business with Bank C. And it turns out that A lost too much and is bankrupt, can't pay Bank B, so Bank C is not going to do business. I mean, it's a financial orgy, and everybody's worried about who's infected. You're not going to get paid, which means you now have risk of becoming insolvent. And that's what happened in 2008, 2009. The counterparty risk was what banks were afraid of. Now, speaking of counterparty risk, that's why you want the assets. You want your stock certificates. You want your metals. You want as few intermediaries between you and your assets as possible. The only difference is how many dollars, how many euro, how many yen, how many British pounds, Canadian dollars, whatever you need to purchase that ounce of gold or ounce of silver. And because they've dropped in purchasing power, that's the reason the price of gold is higher and the price of silver is higher. Nothing happened with the ounce of gold or the ounce of silver. What happened is the purchasing power of the fiat currencies basically collapsed this year. When things go bad, when the shithouse comes down, your coin is going to be, I mean, an ounce of gold is going to be an ounce of gold, an ounce of silver is going to be an ounce of silver. I mean, that'll get sorted out once things reboot and we have a system coming back up. But once the system's down, an ounce of silver is going to be an ounce of silver, an ounce of gold is going to be an ounce of gold, and basically you're going to be able to get for it whatever you can barter.
These are currently available at historic near zero premiums, representing a fleeting opportunity to get the best for the least. As counterparty risk explodes and the credit market unwinds in 2026, these physical assets will transition from investments to essential survival money, the only universally accepted barter tool when faith in fiat currencies collapses. The time to position yourself outside the failing paper system is now. Subscribe to Fine Metals for future updates.
Market in the world, if you will. Gold and silver have been bought, and the deficits, the supply deficits, have been exposed, not because of Americans. I mean, you know, as a broker this year, we took more sell orders from clients than we had combined in all the years of our careers, or at least I did. I mean, I took tons and tons of sell orders this year. So North America was a seller, yet the price of gold and silver exploded higher. And the reason being, you had central banks from all over the world buying. You've got India importing massive amounts of silver. China's a huge buyer. Russia's a buyer. And mentioning Russia, this whole thing got kicked off when Biden tried to weaponize the dollar, the SWIFT clearing system, and confiscate the 300 plus billion that Russia had in reserves. The dollar itself, the euro, the yen, the pound, they're all fiat currencies, and they all are valued because of confidence. Confidence goes another step further. The reason, and going back to the reason governments don't want gold and silver to go higher is because that shows a lack of confidence in their currencies, and it makes it more difficult for them to borrow. The suppression scheme on gold and silver really started in 1996 with Robert Rubin with what he called the strong dollar policy. And the strong dollar policy basically was dollar good, gold bad. And, you know, they were able to, for years and years, they were able to put a collar on gold and silver. That collar is breaking, and as that breaks, so does trust. And you're right, there's so much, it's hard to tell what's real and what's not real. I prefer using smaller non-bank vaults as opposed to national names, because those would be easier targets for the government to say, you know, just turn everything over. One of the vaults that I know you also use is in North Dakota. I'm comfortable with that because North Dakota is the only state in the country that's not part of the Federal Reserve System. So theoretically, you could not have a federal agent walk in and say, tell us who your customers are. And I don't believe that the counterparty risk extends to the trustee, basically the bookkeeper, because they don't have control of the metal itself. The metal is in a vault. And being in a vault, understand that when the great taking happens, it's all going to be done by computer. Everything's on the books on a computer. Things are on blockchain. They're easily confiscated by pressing, a few strokes of a computer key. North Americans are feeling the pinch between the cost of living going up and the incomes, the wages aren't keeping up with it, and that's come to a head. So you had a lot of selling. And same thing with silver. The only way to buy silver back in the 70s, and early 80s was via junk silver. I mean, there were other ways, but primarily that's what North Americans bought, was pre-1965 dimes, quarters, half dollars. And a lot of those bought in the $30, $40, $50 range. And for 20, 30, 40 years, people were thinking, if silver ever gets back to $50, I'm going to get my money back out of it. And that's what you've seen a lot of sellers of junk silver, and the dealers got overwhelmed, and their response was to lower their bids. And whenever anybody sold to them, they sent that junk off to refiners to melt it down. So if they're taking a 6% or 8% or 10% discount bid to customers, they're picking that up when they get it refined. Now, right now, yes, that's uncomfortable because you're looking at the bid now, $5, $6 under spot for junk. So that's not comfortable if you own junk silver. But I think if you wait 3 months, 6 months, a year, this glut of sales from the 1970s and 80s, once that funnels its way through the snake, guess what? There's way less junk silver available or in existence than there was before this. And you can put this down. I'm sure people come back to me if it doesn't happen, but in my opinion, my response would be, don't be stupid. Don't pay 100% premium on gold. I mean, gold is gold, with the exception of pre-33 gold. Yeah, it's not confiscatable, so there should be some type of premium. And like I said, historically, that premium has been 20 to 30% in that range over spot. If somebody's wanting you to pay more than that, that's ridiculous. And in today's market, you should be paying within, $100 a spot. And unless you go up to MS65s, MS66, you're not going to be, $300, $400, $500 over spot. The majority of 2025, I think it started probably in March or April, where the refiners started getting overwhelmed. And the result is an unbelievable value. If you're looking to buy silver, it happens to be that the best form to own, constitutional silver, is also the cheapest form to own. I mean, you could buy junk now at spot, 50 cents over spot, and you're looking at $6, $7 on Eagles, $3 or thereabouts on bars. I mean, nothing was fixed after 2008. Nothing. All they did was double down, and double down. So now there's way more debt. Now there's way more money supply. The balance sheet of the Fed basically blew out tenfold in 2008. Went from 800 billion to 8, 9, 10 trillion. No, I mean, it's a progression is what it is. And I guess the best way you could look at it is it's a flame out, because the debt gets so large. In order to pay that debt, in order to pay the debt service, they have to increase the money supply. And what that does, if you think of the money supply as a pie, the money supply gets bigger, but there's way more slices to that money supply. So each slice is worth less. And that's the purchasing power. That shows, the purchasing power drops. People look at the movement this year in gold and silver and say, wow, gold went up. Wow, silver went up. Well, yeah, they do move against each other, but no, an ounce of silver today is that same ounce of silver back on December 31st. An ounce of gold today, same ounce of gold it was December 31st. 2026, I don't know whether we make it or not. I don't want this thing to come down. I even though life has changed dramatically from the standpoint of, the way we grew up, it's still better than a system that goes down and a Mad Max scenario where financial markets don't work. You can't get gasoline, you can't get food. That's where we're headed. And that will be caused by credit markets seizing up. Well, yeah, if you have farmland, you can grow stuff and sell it and eat it yourself. Ammo is not a bad thing to have. You can barter with that, and you can also protect yourself with that. Storing up food. Anything that you have can be bartered. So keep that in mind when you're preparing and stocking up. Think to yourself, if I didn't have this, what I want, and what would I give for it? And at the same time, you've got, for instance, Bank of Japan. They're raising interest rates. They're blowing up the carry trade. The carry trade is what allowed liquidity to support asset prices, and that is unwinding. And I think that's going to come to fruition in 2026. And I believe that that's what the metals, what the commodities are looking at. That's why you're seeing commodities run, and the metals have been just on fire. The two best performers for 2025, I believe, were gold, silver, and of course the miners. And I think they're sniffing that out. They're sniffing out the fact that they're going to have to print to oblivion in order to service the debt. Farmers, the only way they can spend their product is give it to someone for something in return. And I mean, I've talked to many, many farmers over the years. I think I've only had one farmer tell me, no, I won't accept silver for, my eggs or chickens or whatever. But just understand that gold and silver are themselves money. And farmers understand that. And when the system comes down, it won't be but a week or two before people understand, hey, wait a minute. Gold and silver are money. I'm not going to accept paper dollars, because what are they? What are they backed by? They're backed by a bankrupt issuer.